Hello everyone, welcome to Crypto and Henry, and today I'm going to talk about dividend ETFs. And why do I think, in my personal opinion, that dividend ETFs are such an amazing opportunity now that we are in a bear market? But before starting, this is not financial advice, this is only my personal opinion. So without further ado, let's get into it. All right, so I bring here five different dividend ETFs. And basically, what is a dividend? What is an ETF? An ETF is an exchange traded fund, and it's basically an investment fund that invests in a number of stocks that you can buy and sell its units in a regular exchange. And what happens with these dividend ETFs is that the manager of these ETFs chooses companies that pays high dividends. They pay dividends sometimes every month, every quarter. It doesn't really matter. What matters is that they have a higher dividend yield. And in this case, I just want to give you here the example of HDV, the Fidelity iShares Core High Dividend Yield ETF. It's one of my favorite dividend ETFs. And if we check their website, this is just for the sake of the example, but as you can see here, usually these dividend ETFs are composed by uh, blue chips, very big companies that are very well established in the market and pay high dividends. You have here ExxonMobil, AbbVie, Johnson& Johnson, JP Morgan, Chevron, Verizon, Philip Morris, Procter& Gamble, Merck, Coca-Cola. So these are all very big companies that usually in a bear market, when everyone is depressed and panicking, they usually can handle quite well this kind of volatility, are much less volatile companies, making the ETF also less volatile. And also the good thing is that they pay high dividends, as you can see here. No, actually, this is not the dividend that they pay. This is the weight of the company in the portfolio. But these companies indeed pay high dividends. That's the main point that I want to talk about. And why are these dividend ETFs a good opportunity at the moment? So I have here five dividend ETFs that I want to show you. And the thing is that they usually are more stable to bear markets. They have less volatility because they are composed by big companies, by blue chips, and they have also these juicy dividend yields, meaning that they pay dividends sometimes every month, sometimes every quarter. And in addition to the fact that they can go up in value, you also receive the dividends. And now the point is that these ETFs are selling at a discount because of the bear market, right? So you have here the HDV, ticker symbol HDV, iShares Core High Dividend ETF. As you can see here, is trading at a 10% discount. It was at $110, 109, and now it's $99. And if you buy this in the meantime, the market recovers, is going to be a bigger bang for your buck in terms of dividend. So first, number one, HDV. Number two, DGRO, iShares Core Dividend Growth ETF. It was also at the 50 something. Now it's 46. It's actually, this one is trading like a 20% discount, while the dividend yield, as you can see here, is 2.28. Then we have DVY, iShares Selected Dividend ETF. So the three first ETFs that we see here are iShares Fidelity, and this one also the same, is trading at a 10% discount approximately. Then we have the Schwab US Dividend Equity ETF, uh, ticker symbol STHD. As you can see here, also trading approximately at a 10% discount and pays a dividend of 3.22, which is super interesting. And then we have finally OZA Alps O Shares US Quality Dividend ETF. The dividend is a bit smaller. Among these five dividend ETFs, this is probably the least favorite, but in terms of diversification, I also like to have uh, maybe a little bit of this one. And it's also trading at close to 20% discount. Now, just one side note: this dividend that we are looking at here, it has a little bit lower dividend yield, and also the expense ratio is 0.48, which is kind of seen as a high expense ratio for an ETF. When you look at the Charles Schwab dividends, what is this trying? Okay, the expense ratio is 0.06 and iShares is 0.08%, meaning that let's say the fee that you pay to Charles Schwab or to Fidelity is way lower. Okay, so this is basically the dividends that I want to bring you today: HDV, DGRO, DVY, SCHD, and OZA. And the reason why it's a eventually good time to buy them is that they are trading at a significant discount. As you can see, if I zoom out, I put here the 5-year chart. You can see that, for example, when in 2022, in March, April, when you had the crash because of the COVID, it was also like a quite good opportunity, right? If you bought this dividend ETF at 65 and it goes up and it continues to pay dividends, uh, it's quite good in terms of the rentability that you can get from there. All right. So these are the 5 dividend ETFs that I had to bring you today. Let me know what you think about them in the comment section. And by the way, if you like, give it a thumbs up and subscribe. It will really help. All right. I'll see you on the next one.